Try to do that. Put that aside and try to make that loss. So if you decide to leave your job or you decide to travel for a month, you have that money set aside for that emergency. Something happens, you're not stressed out about it. When I left the restaurant, I was able to float myself for more than a year if something happened, if I didn't have the income, because I had the money set aside. So for me, that was empowering. It gave me the confidence to take the leap, to leave the restaurant and to go to multifamily real estate full time.
Hello, everybody. This is Jake Stenziano, host of Wheelbarrow Profits Podcast, here with my co-host, the multifamily mentor, the coach, chef, father, six, the best-selling author, the G-Daddy on Christmas Eve, Gino Barbaro. Gino, how's it going?
Merry Christmas, Mr. Stenziano. It's been a great year. How are you doing?
Doing great. Recording this on Christmas Eve. Gonna put it out there right at the beginning of the new year to get everybody's mind around the wealth. The Wealth Roadmap Podcast. We're going to be talking about getting the money, investing the money, and growing the money. So, Mr. G Father, where'd you get the money from in the beginning?
I got the money. It's a good question, Jake. I had so many limiting beliefs about money, and I think money and wealth is all a mindset. I attribute most of my success to listening to T. Harv Eker. It was about, for me, my financial blueprint. And it's amazing. What is your financial blueprint set at? Mine was set at to make a couple $100,000 a year, which is not a bad thing. I'm not saying it's a good or bad thing, but I was stuck in that level for years and years and years. Now, what happens when you open the window and your thermostat's set to 70? It gets cold, temperature drops, thermostat kicks back up to where you were. I had to change my mindset about money. I had to start learning from mentors and start surrounding myself with people who are wealthy. And that's what I wanted in my life. If that's what you want in your life, look at what you're doing. I didn't have the skill set to make more money. That's the reason why I was stuck at the $200,000. I had to expand my skill set and I had to expand my mind. And that's what I ended up doing. And it took me a couple of years. It's not going to happen overnight. It's not an overnight process. You know, you gain 50 pounds over the last 20 years. You're not going to lose it in 2 months. It's going to take you a while to do it. You need to put muscles on. And that's what I learned. So I wanted to send my financial blueprint to financial freedom. That's what I ended up doing. That's what I wanted to focus on. And I think part of what Jake and I are going to be talking about today is really, let's start focusing on buying assets. Now, let's not focus as much on going out and making money. We need to make money to save the money. And I'm going to tell everybody, this is one of the most important things that I really dawned on me as I was sitting at a Dave Ramsey event. I wanted to become a financial coach, Jake. I wanted to tell people with finances. So I'm sitting there and all I hear from the whole time, save for this event, save for that event, save for this event. Well, if I save for each child's college education, when my daughter finishes college, that savings is depleted. You should not save for an event. If you want to become middle class, that's fine. If you want to create wealth, you don't save for the event. You buy an asset for that event. Once you buy the asset for that event, that asset creates a dividend or creates a yield. That yield will pay for that event. And when that event is over, my daughter's done with college, guess what? My son is up to bat and he's going to college. You know what, Jake? We still have Courtyard. Courtyard's still printing money every month. Last time I checked, it's principal's being paid down. We're getting tax benefits and I'm getting appreciation and it's paying me every month. And guess how I'm paying for my son's college? And when my son is over, the next one's up to bat and Courtyard's still there, printing money. And if it's not Courtyard, it's another asset. Now, if I put money in a 529 plan and they didn't go to college, then I'd lose the benefits. And if they did go to college, I'd have to have 6 different buckets. It's such an inefficient way to do it. And for me, that was the aha moment. I'm not going to save for this event. I'm going to buy an asset for this event and let the asset pay for the event. And when the event is over, I have the asset for another event. And even if it's not for another event, I just have it for myself and I'm appreciating. And if anything happens in the economy, there's inflation, that asset, that hard asset, especially for us, real estate is going to appreciate, is going to keep up with inflation. Your savings will not keep up with inflation, but your assets will, especially real estate.
It sounds like financial slavery. And when you were talking about having to save for this and save for that, I was starting to like cringe inside. I'm like, that sounds like a terrible life because it's so tight-fisted and restrictive and you're not living a life of abundance. I just can't imagine that it was like everything. Oh, I got to pay for this. I got to pay for that. And I have a job and I'm going to now cut up the pie and deploy all these funds to this different, these different, life events and then be left with what? it's just such, you're confining yourself like a rat in a cage. And it
But
just sounds,
don't lie though. You were doing the same thing, right? In the beginning,
no,
like the
I'm
first.
about to actually.
Oh,
I
okay.
was making some notes of what you're saying, because not only was I doing that, but I was also, to your point and the limiting beliefs. My limiting belief was, especially I grew up in a small town in Western New York. I didn't think that I should be a business owner, and I told you this before. And it was like I just couldn't, fathom like actually owning a business, because in the town that I grew up in, there's a large central school. A lot of people worked at the school. There's like 3 police stations in my town, which was extremely small, which made no sense. But I think they were just trying to give people jobs. And there was like this chair factory. So there was really no small business owners, and I was never really exposed to that. So my limiting belief was, people don't really, own businesses or own jobs. I just couldn't really get my head wrapped around that. So that was a limiting belief that I had. And so, as we get into this, I finally, got a decent paying, corporate job, and I started saving money. To your point, I was doing exactly that, and putting money in the 401k, all this stuff that I was trying to figure it out as I was going. And this is what I was supposed to do. But I think the key to what we're diving into now is that you have to get money from somewhere in the beginning, because to buy these assets, maybe, and here's the thing that I'm also hearing from a lot of the folks on the team and a lot of people that we're working with. And I don't want to sound like the old guy preaching here, but a lot of folks that are coming up through now and maybe not going to college or graduating, don't want to work in these W-2 jobs and don't want to be restricted. And it's almost like looked at as like this bad thing to work for the company or work for a corporation. And they just say, I want to do my own thing. And it's like, well, sometimes you also have to, get out there and earn it. And you have to take your lumps, and you have to get some exposure and experience. And so I just, if you're, younger, guy or gal out there right now, and you're saying, I don't want to work for somebody, I don't want to do this. Look, I had to do it. I went out and I got a sales job, and I, I climbed the corporate ladder to a certain extent, if you will. And it allowed me to save some money. I humbled myself, I put some money away, and it allowed me to get into that first asset. So the key is you have to get money from somewhere. If you want to go out and start a business right away and you can do that, great. For me, I was able to get into a corporate job, and I'm going to tell you this, I learned a shit ton from my days in corporate about, because there was times where it was good, and I learned about what good culture looks like, and I was able to apply it to our businesses. So the training that I got was invaluable to then growing my own business. And if I've never would have had that exposure, I wouldn't have understood, hey, this is what the good culture looks like, and this is what the bad culture looks like. Because when it comes down to it, it's people, systems, and culture. I know Gino and I pound that drum all the time, but I truly believe it. That's how you grow and sustain a great business. And if you've never been exposed to it, how do you know what it looks like?
Dude, I got like a couple minutes to go before we get into this roadmap, but let me hit on a couple
I
things.
thought we were in the roadmap. I thought we were partying in the roadmap right now.
Well, I'm going to lay out some steps here, but first thing, everybody out there listening, I challenge you. If my boy Yaki Boom Boom can humble himself, then you all can humble yourselves out there, because it's hard when you're young and when you want to grow more. You have to surround yourself and find role models that you want to emulate. If you're into sports, you're going to emulate sports role models. If you're into business, go out there and find role models who are in business and doing business. If you want to emulate somebody who works in a chair factory, go emulate that person. But just be aware and be cognizant of the messages that you put into your mind. Be aware of what's going in your mind and what's going in your mouth as far as nutrition. You have to be aware of what your surroundings are. Surround yourself with better people. The next thing about savings, who wins when you save money? You don't. The financial institutions win. The 529s, the mutual funds, the pension plans, they all win, because guess what they're doing? They're using your money to make money. So that's what you have to be aware of. You're not making money with savings. All you're doing is you're putting savings. You're saving to buy an asset. That's what you're doing when you're saving money. The next thing is, don't want everyone to fall into that trap of in the corporate job. When you make more money, you're going to spend more money, and you think you deserve it, right? We don't deserve anything in this world. We work hard for it. Don't think just because you made an extra $25,000 in your salary, I can go out and buy a nicer car, whatever. That's what we all fall. That's what's called slavery in this modern world. When you fall into that trap, listen, I fell into it when I was at the restaurant. built a bigger house. That's what I thought, because my mom's generation, that's what they did, because they could do that. It was at a different time. Money was worth more. There were less expenses. Go down your expenses. Go down your budget. What is Netflix? What is Hulu? What is Amazon Prime? What is Costco? What is Comcast internet cable? What is your cell phone bill?
Starbucks, Target,
Those bills end up to be more than what my parents
Amazon.
paid for mortgage. Like, all my subscriptions are more than what my parents used to pay for their mortgage. So, and it's things that if you don't get under control, you think it's hard for me to put into words. We don't
No,
deserve
that's your seed money though. That's your asset seed money that you're lighting on fire every month, and you're just leveling up and living into the moment, and you're not taking the long view. I think that's the key to it, is you're letting this stuff wither away your potential, future investments and assets that will pay for the lifestyle if you're able to commit and really be disciplined. It's the discipline that I think is so hard, because hey, so-and-so's going here, and so-and-so's, going out there and buying the new car, and you want to keep up because you feel like, something's wrong with you. But if you are able to kind of separate yourself from the perception that everyone has, because no one really gives a shit. They just care about themselves. They don't care if you have a Corvette or not. You're just trying to make, yourself feel that you're on the same level as someone else. But if we could all see each other's income statements, that's where it really comes down to. So if you're putting that money back in liquidity and you're able to deploy an asset, it'll feel like in the short term you're really like below, but all of a sudden there's going to be this huge snowball shift, and people are going to say, well, what the hell happened there? And then maybe you start distancing yourself from those people because you're living a different lifestyle, et cetera. But it's that discipline early on that's going to allow you to get to that point.
I love that. So the first thing I think is, we have to think about delaying instant gratification, and with your W-2 job. I think that's the first step on the wealth roadmap. Is you're going to have to understand that it's a long game. You're not going to win in 6 months or a year. It's going to take a couple of years to get, your muscles on. And I'm going to tell you from personal experience, you're not going to be any happier in the long run driving a nicer car than a regular car. You're going to be happier.
That's 4 weeks of dopamine right there, tops,
yeah,
right?
You're going to be happier 3 years from now saying goodbye to your boss, or saying, you know what, I want to work on Christmas Eve because I love to. That's what's going to make you truly happy, your sole purpose, not having a Porsche or a Tesla like I'm looking at. Those are nice. Those are nice accoutrements, but they don't really drive you. They don't fuel you. Profit is the fuel. It's not the destination with Jake and I, right? So think about it that way. And I want you to say to yourself, I don't want that instant gratification. I want to delay it. So a W-2 job to earn and save money, save your additional money to invest. I think that's the first step. You got to change your mindset into doing that. I need to save any additional money. I need to cut out the fat, and I need to delay my gratification of buying things that I don't need.
So number one, to be clear for everybody, because we've been like kind of going around in circles here.
Yes.
But I think number one is, regardless of what it is, you're going to have to get money. So if it's humbling yourself in a corporate job, if it's wholesaling, if it's flipping houses, whatever it is, the first step is to get some type of seed money, whether it's partnering, with someone else and getting an acquisition fee, whatever that is. We're not telling you how to do it. We're just saying, in our experience, what got us to the next level was having some sort of seed money to invest in real assets. Because keep in mind, gang, our first 1,000 assets that we bought, our first 1,000 doors, our first 1,000 apartment units, we bought in-house. Okay. And that's that, and I don't want to say we're different from a lot of the other folks out there, but we actually own our properties, unlike many other folks out there that just, syndicate deals and stuff. And we've started syndicating as well. And it's a tool in our tool belt, but we were able to set ourselves free because we actually own assets that pay us a lot every month. So I think that's the key. You have to get some money to invest into assets. However you do it, that is definitely the first step.
And that's important, because what's an asset? Maybe that money that you're getting is to invest in yourself. Invest in the education is step number 2. Education times action equals results. Begin to educate yourself on investing and changing your mindset. Now, that's what's going to happen. On our 5th deal, Jake and I did a 281 unit, $11 million deal with zero money down. Life-changing event, $140,000 at the closing table came back to us. The title lady said, I've never seen this before. Jake said, I haven't either. It would not have happened on our first or second deal. So you don't need your money as you start going down the path. Syndication is a great example of that. But you do need some money in the beginning to start, because you need to start building it up. You need to start getting results. We have our partner, Mike, who came on with us in the beginning. And if we didn't have the skill set and the ability to manage these assets, but to buy these assets correctly, we wouldn't have had a partner. So you need to know what you're doing. That education is so important. We go to college for 4 years. We get into student debt for a job. Don't you think you could spend $10, $15, $20,000 on personal development? I went to coaching school. I spent a ton of money to go to coaching school. Best thing I ever did in my life, much better than a 4-year degree at a college, because I worked on myself and it was huge. I found out what my why was. So I think everybody out there, that second step is begin to educate yourself on investing and changing your mindset. Mr. Stenziano, you need to
Yeah,
add on
and
that
Gino,
one.
I mean, it's no, it's even to this year. Like we've spent more this year on education than both of us have spent on college.
In
For
our
both of us
entire
combined,
lives.
and I have a master's
Yes.
degree. So
Yes.
and that's and I don't talk about that ever because I think it's you know it's like my toilet paper. You know, it's worthless. You know, I saw a Chick-fil-A marketing video. That's the only thing I remember from the whole thing. You know, getting an MBA in marketing. But anyways, it's just you got to really take a look at what's going to produce yield, and is it a art history degree because think about it, you used to go to school, put money in to then be able to get a job and make money from it. So that's why we look for education in our lives. We do scaling up coaching. It's one of the prime examples. I think that one alone is like $60,000 a year or something, but it's made a tremendous impact. It's helped us with our core values. It's helped us with our quarterly planning. It's got us laser focused. And because Gino and I tend to have this machine gun effect that says we want to eat the whole pie.
No,
and we do a million things at once.
Gino.
And it's helped to compartmentalize our planning and things. So, but these things are important, and as you grow and scale, you need to add these different things on. So I think it's investing in yourself is a huge piece to it. And then
is it no coincidence that we have amazing members, amazing people who work for us? We would not have had that if we didn't have the scaling up, if we didn't talk about culture and people, and even the Jake and Gino community members. Big shout out to all the community members out there. We have amazing people because that's who we're attracting. And if we're not scaling up and weren't working on that, on the top grading and hiring these people, we wouldn't have that. So it's important to work on yourself because you don't know what you don't know. And everyone says ignorance is bliss. Ignorance is dangerous, bro. I mean, if you don't know that you're buying a C asset at a 4 cap, this type of the market, and you think that's okay, that's risky, this type of the market. So you need to find out, and you need to educate yourself. It's really important. I think the next one is, Jake, is really, really what changed my life. That meeting that I had with you back in 2009, I first met you. Then when I met you back in 2011 again at the restaurant, we'd known each other for a couple of years. And I sat with you at the booth.
Gino, is this our 10-year anniversary? Sorry.
Jeez. Wow, time flies. But I'm going to let everyone know, just picture this. It's 2011. I'm coming out of the restaurant. The market, the economy stinks. Jake is sitting there going, I want to get into real estate. I want to buy a mixed use building. And I sit down, whip out my laptop. I'm sitting at a booth in the restaurant, and Jake's like, I'm leaving to go to Knoxville. I'm like, Knoxville? I don't even know where Knoxville is.
What do you mean, Nashville? Right?
I didn't know where Nashville was either at the time. So I open up the laptop, go on LoopNet, and I'm like, wow, this is not New York investing. So I say to Jake, when you get down there, Jake, give me a call. Jake gives me a call. The rest is history. The point of the story is I surrounded myself with an amazing partner. I surrounded myself with an amazing community that we have now, and that with Jake and Gino events. I surrounded myself with an amazing mastermind groups. I'm in a lot of different mastermind groups where I'm picking other masterminds' brains, and we're all, coordinating. We're all thinking bigger. I attended a lot of events, and now, believe it or not, we're creating the events for people to come to. So you need to surround yourself with other people, like-minded people. And, it might be self-serving to say that because we do have the community, but how are you going to get into multifamily if everyone around you is saying it's risky? Don't do it. You're crazy. Even my mother, I'll give you the story of my mother. I went into Rochester. My first couple of deals, I did okay. My mom comes to me and goes, you've got 6 kids. You're taking a risk. You got put.
I can just see,
some of your mother, who's a little tiny lady who could kick your ass in 3 seconds, says that. You say, you know what? Maybe real estate is risky. But I had such a passion, and I saw the future of what was going to happen with the small mom and pops. I said to myself, I'm going to go with Jake. I'm going to invest, and I'm not going to tell her. I'm going to identify as a multifamily investor, and I'm going to do it behind the scenes. All she was trying to do is trying to protect me. But if I didn't have the accountability from my partner and the accountability from a group, I would not have succeeded. 200 units after we started, I told my mom. She was shocked. I said, Mom, you see me working here every day. What do you think I'm doing? I'm making it happen here. For the last year and a half, I was at the restaurant every day doing it. But it's important that you surround yourself with people that you like, you trust, and you want to work with and have the same value-based decision-making as you do. And if you're going to do something for your partner better be willing to do something for you. So it's important to get surrounded with people like that.
Dude, it gives me goosebumps thinking back to MM3 and seeing your mom there, and
She
getting
didn't know
pictures.
what the hell was
She
going
was
on,
so
bro.
blown away, dude. It was just so cool, and she's like getting these pictures, and she's just like, had like the whole like red carpet celebrity status, and she's just like, what is going on? Like, it was really cool, man.
Yeah, and just talk about that a little bit. Talk about how when you're at the corporate job or you're at the restaurant, you're surrounded by people in that element, and you try to extract yourself from that element and trying to get into multifamily. I'm sure if you didn't have me helping you out, it would have been really difficult for you to do it, because it's like, where do I
Oh
start?
no, I would
How
have
do I
ended up
do
in
it?
like a mixed use building and like floundering, and because I didn't have the education. You know what I mean? At the end of the day, and that's
But
where
it's
the
also
two
the
things when you
accountability
meet.
too. I think the
Oh, no
accountability
doubt.
about, hey, Gino, what are we going to do with this tenant right now? Hey, how do we,
I had limiting beliefs too, Gino. Like, like not to be corny, but like
we all do,
and
Jake.
and then so go getting into it. And I was like, for me, I didn't know what that term was, and I think it really, like, my mind expanded when you and I were talking about them and things. I was like, oh, these things are real.
So number one is W-2 job to earn money and save money. Number two is begin to educate yourself. This is the number three, that join the mastermind groups and surround yourself with like-minded people.
I want
Number
to touch on that one real quick. And
Sure.
sorry to interrupt, but it's like
Not,
one of
not
the
at all.
coolest things that we do, and I don't mind saying this because I definitely am far from knowing everything, is that when we do our boot camps and we do our different money mixers, a lot of times we'll go out of our market and we'll go to our friends' properties, and then we'll tour those properties. And the coolest thing is, they may be doing something a little bit differently than I am. And I'll give a classic example. We were in Nashville this summer, and there's a lot of people with that own brick buildings as we do have these metal stairwells going up to them. And it was really cool how these guys were actually they welded on these cement steps, and they just got a pallet of them, and it was a really affordable way to extend the life of them. And so I got I was taking pictures, and when I returned home, I was like sharing it with the team, and and every time I got these little notepads, and I'm scribbling down as we're going, because look, you don't know what you don't know. And when you see maybe someone's doing it more efficiently, you get to just, mastermind and see how folks are running their properties. And as operators, it's great to, get on each other's properties and compare notes. I think that's been valuable for me as, a community leader within Jake and Gino. So
I
it's
love
been really
that, dude.
cool. Yeah.
Number four is another mind shift one. To me, this means everything to me. And this is when I shifted my mind. It's to become a producer, not a consumer.
Not a looter, baby.
It's really hard. MJ DeMarco talks about it. We've had him on our podcast a couple of years ago. I'd love to get him back on. But you have to shift your mindset from consuming to producing. ET says producers create producers. And that's what we are doing at Jake and Gino. Our students are doing deals. Our employees are doing deals. Everyone's doing deals. We're all investing together. We want to create producers because producers create wealth. If all you do is consume and don't produce, you're going to be broke. That's a really, truly important point. And for you out there who are like, what is he talking about? It might take a little while to sink in, but those of you who are out there on the cusp are like, wow, that makes total sense. And it made total sense to me when MJ was talking about it, because it's, production is all about life. I mean, hey, listen, I've produced 6 kids, right? It's an amazing thing.
The G-Dad's all about making it rain.
And I've got to produce
think about the power of what you just said, though. If you think about our community, we have, everybody that's working for us is doing deals, whether they're investing in our deals or they're going out and doing their own deals. We're doing deals. Everybody in the Jake and Gino community is doing deals. It's like every other day inside the private Facebook group, someone's posting, hey, just did this. So it's like you're surrounding yourself with this, extreme community of abundance, and everyone's making it happen.
Everyone's working together, because multifamily is a team sport. Over 5,000 units and counting for the Jake and Gino community. I would venture to say that's much more than that, because I can't keep track of all of them. Keep sending them in, Jake and Gino community members. Steve Matrano, we got Lee Fjord, we got Chad King just this month. We've got a bunch of students out there. Nick Amalux, another 60 units. We have students that are leaving their jobs and going into multifamily full time. So just keep doing it, keep rocking it, keep producing, right? The next one just ties right into that. It's produce assets that produce a yield, purchase assets that produce a yield. Don't buy a home thinking that that's an asset. Don't buy a car thinking that's an asset because it's not producing a yield for you. Now, if you have to buy a stock that has a dividend, okay, that's at least producing a yield. We don't really like it because we have no control of the stock market. It's at the whim. They can cut the dividend whenever they want. I'd rather buy a 15-unit apartment complex that pays me $1,000 a month, gives me really great tax benefits. And if I want to cut the dividend and put it back into the property, I can do that, or I can draw, or I can sell the property, or I can refinance the property, whatever it is.
You're
Buy
driving the ship, though.
assets that produce a yield. Yes.
Yeah, it's no doubt. And I think that the one thing that, for 2020 that I want everyone to kind of re-engage with is, if you need to use a community bank, guys, it's okay. You know what I mean? It's like, there's certain circumstances where it's not necessarily the worst thing. And if you can find a 30-unit apartment complex that you're going to buy, or you and the GDad are going to buy, and it's going to make you money, $2,000 a month, whatever the case may be, that's okay too. That's actually a very, very good thing. That's legacy wealth that you're creating right there. So let's just not poo-poo the things that are true assets that are going to produce yield and make money for us. I think that, in the last year, I think Gino and I, at least maybe I got caught up a little bit too much in, forcing it that everything's got to be on, agency, and, we're just doing 150 units or over. Hey, if a good 60 unit comes our way, let's take a look at it, right?
That's the Jake Stenziano evolution right there, right? That's the growth mindset. He's shedding his ego. I think ego is one of the biggest killers for the human race, because you always want to be right. You think you know it all, and you think that you're an expert. No, we are not experts. We've been shown for the last 3 years that we've been completely wrong about the economy, about macroeconomics, about everything, right? But what's going on with the world. Know that you don't know everything. Know that the market changes. Know that it's okay not to know everything, but make sure that you go out there and you surround yourself with great people. That's what we've done. That's how we've learned about the finance right portion of it. We've surrounded ourselves with great people who know finance, and we just step back and we take a logical approach. Higher emotions lead to higher intelligence. Lower emotions, which a lot of people exhibit, lead to lower intelligence. So Jake just exhibited higher emotion and said, let me take a step back. Let me look at the surroundings. Fannie and Freddie were a little light towards the end of the year. CMBS popped up.
The LTV's the issue too. Yeah.
Right. CMBS popped up, but we're not really big fans of CMBS. Private lending came up, but we use community banks. Community banks have come back, and you know what? They're good. IO's good. Rate's good. AM is good.
I like the leverage.
Yes, and the leverage portion. Oh yeah, well that's the icing on the cake, right? So that's really important. So that was number 5. Purchase assets that produce a yield. Number 6 is get into a better tax position. My old man used to say, it's not what you make, it's what you keep. And you can talk to any high income earner, doctor, attorney, sports agent.
I just saw it this morning on CNBC, Gino. The wealthy are fleeing New York for Texas and Florida.
And
the salt, you know what I mean? Whatever the case may be.
Your boy, the Yankees, they just signed Cole, the guy from Houston.
Yeah.
What's his contract? Somebody made it.
$350 million or something like that?
How much of that is he keeping? He's making $350 million. If you just think about it, how much he's donating to the feds. I'm just saying, It's a ton of money, but think about that.
He should give us a call. Maybe we can help him with that.
I'd love to help him with that problem, right? But I just want everyone out there to think about that. Think about what you're paying in taxes. Think about how to become more efficient. Multifamily is a great vehicle to help you with that, whether you're being a general partner in a deal, a limited partner in a deal, whether you're buying your own deals. It's a great asset class to purchase. There's other assets that you can purchase. Take a look at them. I'm not a tax advisor or a financial planner, but I know there's assets out there that can help you with that, with your tax situation.
Yeah, no, I think it's a huge component of the strategy. And, it was something that I wasn't even considering getting into it. And it was just like this, like cherry on top once we started to really understand cost seg and implementing, being a real estate professional. It's been fantastic.
Number 7, reinvest the yield into other assets, better known by Jake and Gino as refi and roll. Now, this doesn't mean you go to refi your assets. What this also can be interpreted is, if you're making income and all of a sudden your property is printing off money, don't go out and buy the expensive stuff. Put the money on the side. Save that for your next asset. If your property is printing $3,000 or $4,000 a month and you're living on your W-2 income, don't think you just deserve to spend more money. What I did with Jake was I was living on my W-2 income with the restaurant. That extra cash flow that I was making every month, I was putting it away to be able to buy that next asset. And for me, it was huge that I did that. I tapped every resource that I could, but that little extra money every month went a long way. And then eventually we're able to refi over $9 million from our portfolio, from being financially educated, from taking massive action. Education times action equals results. It doesn't happen overnight. It takes a couple of years. It's a long game. And then we just continue to refinance these properties and roll them into the next deal. So that's really important, being really diligent and being really disciplined. And life coaching helped me with that. My why was clear. My why to me was not the flashy cars. If that's for you, that's fine. But for me, I get really clear in it. My why was, my sole purpose was to help others do what I was doing and to become a mentor and to become a role model to my children. So my children don't have to suffer through life about thinking about having low self-esteem and having to be able to drive expensive cars and wear flashy clothes because that's what's important. No, what's important is really to help others and to really grow as a person. So that to me, buying expensive stuff is not going to help me. So rolling that money into the next deal to become financially free, that was my ultimate goal. So get out there, start reinvesting the money. Don't put that money into assets, especially depreciating assets, or don't put that money into liabilities and squander that
Better way
profit.
to phrase it.
Yes. Yes.
I think the next one is so important too, because it's a sense of freedom. And that's once, you've established yourself and you got the snowball rolling and you're paying off these, or excuse me, you're collecting these assets. Now it's time to kill the personal debt. You're going to go out there, you have money rolling in. This is when you start whacking stuff. Student loan gone, home mortgage gone, credit cards gone. And that way everything that's rolling in can be redeployed. And that's when your snowball just starts, gaining, extreme momentum and really starts growing rapidly, because everything's coming in is okay. You have your burn rate. Maybe it's, you pay for your food and your clothing and your apartment investments, right, Gino? And the rest just continues to grow, and you're able to deploy into more assets. Maybe you step up your asset class a little bit, and you buy stuff that's like a little newer, but you're still making it happen and out there, collecting more apartment buildings, right?
That was number 8, pay off all personal debt to create the snowball. And I think everyone out there really should Google personal debt and business debt. We want
Yes.
business debt. We want to
Yes.
lever up our business debt to pay for our personal. And I think it's important that we do that. And I think, if everyone says, should you buy a house? Should you rent? That's a personal decision. Just
Hmm.
understand one thing. One of my mentors, and even I would consider Jake as a mentor also, he says that a house and cars and even vacations are luxuries. So look at them that way. They're really luxuries. If you
Hmm.
can't afford them, you shouldn't be doing them. If you've got to put something like that on a credit card where you can't go on a vacation, you got to put a vacation on a credit card, save for the vacation. Don't put it, it becomes a mindset. It becomes, okay, I'm not going to have that instant
Or wait till
gratification.
you have the asset that can just pay for the vacation.
Yes, that's even better. But I think those things, that personal debt is like I'm telling you, I'll say it again, it's the slavery. If you have
Hmm.
$100,000 of student debt over your head, you feel trapped. You've already got a mortgage without having an asset. Pay that off. Try to get rid of that. Liberate yourself. Once you're free of that, you have
That
more
is the freedom.
options. And you don't have to go to work. If just look at your life in 2 different ways. Can you imagine going to the office and saying, I want to be here? Or can you go to work and say, I have to be here to pay off debt? The first one is so much more empowering. And the better you feel about your situation, the more you're going to be empowered to do things and to take the right action. So look at it that way. For me, I'm looking to kill my personal debt, all of it. I have a small mortgage left on my home. And of 2019, I'm looking to, me and Jake are having this dilemma and this discussion. Should you do it? Shouldn't you do it? The rates are so
Kill
low.
it.
The money's so cheap. But at the same time, I can always get a HELOC, a line of credit on my house for whatever I need, and just to deploy that short term and then pay it off when I refi and roll. I could do that also. I think it's just a mindset for me to say, you know what, it's gone. That extra money that's not there, I can just redeploy it and put it somewhere else.
So consider this: once you are out of any type of personal debt, you're basically, your assets are paying for your food, your clothing, and your taxes. Okay, so it's not, because you shouldn't have your shelter basically paid at that point. So your assets are paying for your food, your clothing, your taxes, and your fun stuff. Gino's going out buying a Tesla, whatever the case may be, and it may be a business expense, which probably is. So
Hmm.
you have such a lower burn rate at that point, and then it's like, oh, we want to go on a $40,000 vacation. it's fine. You know, the assets are covering it. It's not a risky or aggressive thing to do. And it's just part of living at that point. So I think it takes a minute to get there, but I'm telling you, it's really a sweet spot to be once you put in the work to get that point.
Number 9 is keep the snowball rolling and move to fulfill your sole purpose. Just keep that snowball rolling, keep filling it. And it's amazing how it's like that in every aspect of your life. Let's take multifamily, for instance. Everyone says, how big should I go on my first deal? It really doesn't matter. As long as you buy a good deal and you get
Quality
into it,
deal. Yeah.
you could buy a fourplex. I will guarantee you your next deal is not going to be a single family home. It'll probably be a sixplex. And then the next deal will probably be a 10plex. And then the next deal will probably be a 30 unit. And everyone on this call is probably saying, well, how am I going to find the money? It's not the problem. How are you going to find the money? All of a sudden you're creating value. The money is going to find you. And that's the amazing thing. So Jake, we started out with a 25 unit. It took us 18 months. Ironically enough, 3 months after that 25 unit, Jake is at a Ruby Tuesdays dealing with the owner to buy a 36 unit. How did that happen? We didn't have the money to do
Dealing with
that.
the unit, or was it being shaken down?
I think
And
a
he was
little
trying
bit
to
of
get me
both.
drunk, and I had to walk out and call Gino on the phone saying, "Have you ever been in this
Yeah.
experience before?"
It was a Friday afternoon, and I'm going through dinner rush, and I'm sitting outside at the restaurant in the parking lot, and I'm talking to Jake, and it's really surreal. And I'm saying, wow, we're going to buy our second deal, and it's only 3 months after we closed on our first deal. I was
We're going
totally,
back and forth over $2,000 with this guy.
it was amazing. And then 4 months after that second deal, we got 136 units under contract. Don't know what happened. That's the snowball. There's the momentum going on. All of a sudden, you're in the game of life. And that's the same thing with buying assets and stacking it on. When you have a savings account, it's amazing. When you focus on it, you start putting money in on it, it starts growing. When you start focusing on your multifamily, it starts growing. Same thing with us. So keep the snowball rolling and then ultimately move to fulfill what your sole purpose is. Find out what your sole purpose in life is. I think Jake and I have found ours to an extent. It's really to create these amazing companies, to help these communities, to empower people's lives, and just to really have a great work experience. Get up on a Monday morning and say, I can't wait till Monday. I want to go to work. I think that's part of our sole purpose. I don't want to speak for Jake, but I feel like that's what we're
No,
towards.
that's where it's coming from full circle. And you got the honeybee there, Gino?
I do.
And this is where the final one comes from. It's the giving back. I think in a very short period of time, we started our charitable contributions. We started our RAN Cares organization. We partnered with the Boys and Girls Club this year and built a playground. We gave over 15,000. We fed over 15,000 kids this year for Thanksgiving. So there's a lot of good going on. Gino was in Harlem with the Friars, feeding people. So it's just, I don't know, a lot of food going out, between the two of us. But it's important. I mean, that's one of the basic human needs. I think it's very important that we're fulfilling upon that. And it does something for your culture. I think the most surprising thing, and I don't know why I should be, but it was, is that culture is very important to us, whether it's within our communities, our apartment communities, or our internal employee communities. But the culture that's derived from doing these charitable events is just tremendous. And I'm now I'm thinking of, hey, how can we do more? What's next? So it's been great.
The best thing about it is years ago, I would always say, I don't know, can I give $500 this Christmas to, the Friars, or can I pay for somebody? Now the feeling is like, and people are like, well, why would you want to do that? It's because I can now. It's such a good feeling to be able to give money away. It's a crazy thing, right?
When you
work
have
so hard.
that what you're exactly describing right there, and the times that you've said, should I or should I not, and the times that you don't, will actually hurt your soul more than if you would have just let the thing go. Because then you're having like this internal conflict. Oh, I should have done it. I'm a cheap prick, whatever. Just let it go. Just if you're having the conversation, should I give it or should I just let it go? Just because it's gonna like, you're gonna feel better, and it's gonna torment you if you don't. So if you're ever in that strife, that internal strife, should I give it? Should I not? Just give it. It'll pay off for you in the future.
We're going to have all 9 of these steps in the show notes. What I want to go through real quick is tips on how to really get to these 9, because it's really important. Some of them are Dave Ramsey's tips. I think some of the financial intelligence that he has is great for people who are beginning, but then he just stops, right? He doesn't talk about becoming a producer. He doesn't talk about creating assets and buying assets. He doesn't talk about getting into a better tax position. For him, it's just getting rid of your debt and then living a frugal lifestyle. That's not what we want here. We want to be
Yeah.
able to make, we
Yeah,
want
you
you to
want
be
to actually be in
stewards
the
of your
game.
money.
You're
Yeah.
not playing the game of life if you're stopping there.
Nope.
So
First one, create yourself a home budget. You will save 15 to 20% once you start seeing the Amazon charges, the Target charges, like Jake says. What's the other one?
the
Amazon charges?
SATs, Starbucks, Amazon, and Target. You want to know where your money's going? Look at the SATs.
And I challenge you also on the home
Starbucks,
budget.
Amazon, and Target.
There's also income in a budget. Don't worry about it, just your expenses. Worry about your income. Where else can you find multiple streams of income in your life? Maybe you spend more money writing a blog. Maybe you write a book. Maybe you get on more sales calls, whatever that is. Focus on the top line also and the bottom line. When I became a life coach, I was making a few bucks, having some life coaching calls on top of the restaurant. And then all of a sudden I bought 25 units. So I've got more money coming in on the top line, and my expenses should not be increasing just because my income is increasing. That's the amazing thing that you should see. So create that home budget. There's so many tools out there. Dave Ramsey uses every dollar. I use every dollar, and that's something that I really stress, just to create that personal budget. It'll give you discipline. You can actually control your expenses. Maybe this month you went out too many times this month. Maybe you want to shift your money towards, I can go out one day less and put that money towards charitable giving. Maybe you can do that. That's what a budget allows you to do. It allows you to start, controlling your life. The next one is revolutionary for Jake. I'm going to let him touch on it really quick because I know we're going along with. This is so important. Planning your weeks out, planning your days out. He's been doing this for the last 10 years. He would come into the kitchen with the calendar and go, I need a lunch for January 15th and January 28th. It's going here. I'm like, dude, this guy is prepared. He's ready to go. He knows what his life's about. It's not about chaos. It's not about getting up in the morning and not knowing what you're doing. He gets up and he knows what he's doing for the month. It's really important that you get that dialed into what's going on in your life. Reclaim your time.
It's so funny too, because I was in the office yesterday and someone says, well, can we do this meeting on Thursday or whatever? And everyone's going through, taking out their phones, like trying to find their calendars. I go, yeah, I can do it. And I was like, I'll wait for you the next 2 minutes while you guys look through your things. And it's because everyone picks on me. It's like, oh, you're on cardstock. Dude, it's so efficient and quick for me. It takes a little more time in the front end. Yes, I spend my time Sundays, but that thought, Sunday morning, that clarity that I get from it and the certainty is priceless. And, you guys keep picking on me. Enjoy those Google calendars, and I'll just keep crushing it on my end, baby. So
you hear what that is? That's a pen. When you write something down with a pen, it unlocks your subconscious. You're writing it down. It's almost like you're announcing to yourself, podcast, Jake, Christmas Eve, 9 a.m. Where am I? I'm on a podcast with Jake, Christmas Eve, 9 a.m. because I've written it down on my daily calendar because I write my stuff out weekly and I love to write. I love to. And the other thing is when you scratch it off, it's a sense of accomplishment. Bam.
That's the dopamine I'm looking for. I enjoy that.
Yeah. And then the other thing on your weekly things, put some successes on there. We have a daily huddle where we put our successes on every day. What have we done? Who do we help that day? What do we do? We closed the deal. Jake did a great due diligence call last week. We got great compliments from our team members. Whatever it is, put those things on. It's really important. The next one is create yearly goals. Now, this is the beginning of the year. Everyone's into this. Just try to map out what this year is going to look like for you. Try to see what you're going to accomplish.
Set it quarterly. Have a couple annual initiatives and back into it quarterly, and then set the Q2 initiatives, set the Q3 initiatives. I don't want to the folks out there, because we were not doing this until this last year. This is extremely important. This is part of scaling your business. Know what the top 3 initiatives that you're going to take down, you and your team are going to take down in Q1. This is strategy. This is very important. And don't just overload, because one thing that Gino and I, that we've done so many times, we've just piled on. Have 3 clear initiatives. We are going to do X, Y, and Z to move the needle in Q1, and that should be rolling up to your annual. I think if you take one thing away from this call, we've been dropping a lot of knowledge bombs. That is huge, and a lot of people will gloss over it. So I'm being very repetitive here because I've seen the value in it.
I'm going to play devil's advocate. Fall in love with your actions, not your results. Because if you fall in love with your actions of planning, of calling the broker, of going to work, of doing the education, you will ultimately hit your results. It's really important that you have that mindset of.
And those quarterlies break down into your weeklies, right? So those quarterlies, then now we're having our weekly, touch points. Are those lining up with our quarterly priorities? And we're reviewing those weekly. So
love that.
Touch base with the team every day.
That's awesome. The next one, just real simple. Put aside $1,000 or $2,000, whatever your emergency fund looks like, especially when you're first starting out. Because if you get a flat tire, if you've got to, change an air compressor at your house, you don't want to freak out and go through the credit card. Have that money set aside. Once you use it, it's a great feeling not to stress about money. put the money back for your emergency fund. That's really important. The next one is put the 3 to 6 months of income aside. Try to do that. Put that aside and try to make that loss. So if you decide to leave your job or you decide to travel for a month, you have that money set aside for that emergency. Something happens, you're not stressed out about it. When I left the restaurant, I was able to float myself for more than a year if something happened, if I didn't have the income, because I had the money set aside. So for me, that was empowering. It gave me the confidence to take the leap, to leave the restaurant and to go to multifamily real estate full time. If I was laden with credit card debt, if I had so many expenses, I wouldn't be able to do that. If I didn't have money saved, I wouldn't be able to do that. So that's truly important. I think the next one, number 6, we learned from Garrett Gunderson. It's called, properly insure yourself. He says to insure for the catastrophic, not the consequential. Meet an insurance broker, talk about all the different types of insurance coverages you need, whether it's home, health, auto, umbrella, whatever it is, life insurance, all those. Insure for the catastrophic, not the consequential.
Oh, Gino, too, if you're a community member, if you're part of the Jake and Gino community too, go back and listen to the weekly class that we did with Kelly Thomas, because he broke down exactly what our insurance portfolio looks like and the products that we buy as operators. So I think that'd be a very good one for everyone to check out if you guys didn't catch that class.
Yes. And the last one is the credit score. Just look what your credit score is and start working on it, because the lower the credit score you have, the more expensive everything is. So we've given a ton of information here, Jake, ton of knowledge. How do you want to wrap this? How do you want to wrap this thing up?
I just want to say, everyone strap it on, man. 2020 is coming. I don't think that, a lot of people set these, these New Year's resolutions. This is going to be different this year. You know what? Set your Q1 priorities, get on your weekly huddles, get with your team, and just start kicking down doors. Because I think if you set it as, oh man, I'm going to do it different this time. You know what? No, have your weekly, list planned out, have your Q1 priorities, and make it part of the process. Okay. Get engaged with, this is the process and this is what's going to happen, and start documenting the stuff in Google, have Google Doc folders, and get more organized and systematize your business that way, versus making it that this is like an event because 2020 is going to be different. You know what? Your actions will speak louder than your words. Systematize quarterly priorities, weekly huddles with the team, and go that route versus, saying, that this is something that is changing. This is habit. This is not just starting the year. It's going to be different. No. Change your habits, replace it with something, that's maybe negative, put in these quarterly priorities and weekly huddles.
Jake, I like to end it by giving everyone a tip on motivation. You and I don't need motivation. We're both self-motivated. We both know what we wanted. I always knew about it. My motivation was moving away from pain. I challenge everybody out there. If you're not motivated, look around and see who you're serving. I'm going to give you the perfect example. I become a better speaker, not because I was motivated to do it, because I didn't want to embarrass the Jake and Gino team members of me going on stage and looking like a fool. And I didn't want to embarrass Jake, and I didn't want to embarrass the Jake and Gino brand. So my motivation was to get better for my team and to get better for Josh and for everybody else. So I used that as motivation to get a speaker, to get out of my comfort zone. And that was my motivation to get into multifamily. I didn't want to let my family down. So we know for a fact that we will do more for others than we will for ourselves. So ET says it, if you need to get that motivation, look around and see who you're out there you're serving. If you're serving your family or you're serving your company, even if you're a W-2 employee, it's your duty to get better for that organization or for the people you're serving to do that. So look within you and see who you're serving. So for me, that's why I became successful in multifamily. My wife gave me the leash. She said, it's all on you. Whatever you want to do, I fully support you. So what did I do? I was working 60 to 70 hours a week for 3 to 4 years, probably more, and I still do now, but I didn't want to fail because I don't want to let her down. So if you need to do that, lock into the people that you're serving and make sure you go out there every day and you freaking make it happen for them.
I've said it before, multifamily is a contact sport, and during those hard times, you need to know your why. So for myself, and I know for Gino, we are the providers for our families. And the most important thing is that we're going to show up, we're going to produce, and we're going to make it happen for them, so that when the shit comes, we know how to handle it because we have a strong enough why and we're not backing down. So I think that's the most important thing. Find your why, know what you're doing it for to get you through the tough times. And then hopefully you're going to produce, more of the times of abundance and prosperity, and you're able to deal with the things when they come at you.
Jake, I want to wish you and everybody in the Jake and Gino community a Merry Christmas, a Happy New Year, and a happy holiday season. And I hope you all have a great 2019, rest of 2019, and a great 2020. Thanks,
Peace
bro.
and prosperity, baby.
Love you, bro.
See you, gang. You too.
Bye.
Gino, I know a lot of our listeners are wanting to take their multifamily investing business to the next level. I know that you've been hard at work helping Jake and Gino students do just that using our framework. Can you explain to the listeners how they can get our help?
Guys, we've been hard at work growing our community of like-minded investors, and the results of our members has been nothing short of incredible. We're looking to grow this amazing group. What we're looking for is those who want to follow our proprietary framework that we've created. Buy right, manage right, and finance right. Leverage our connections, education, and mentorship as ways to take your business to the next level.
So if you're interested in finding out more about how you can become a part of our amazing community, apply to work with us at jakeandgino.com/apply.